Well, to sum up all the news that's been affecting the markets today, I'm joined by Ranko Berich. She's Head of Markets Analysis at Monex. Ranko, the US jobs figure, it would have had to have been pretty bad, wouldn't it, for people to say that we're not going to get a rate rise in December. But you've got some controversial thoughts on that. Just tell me about them.
Right, so I think the first thing that needs to be said is it was a solid report. If you look at non-farm payrolls, they're a volatile data series month to month, so they do jump around a little bit. But looking at the 12-month average of the figure, it's at about 220,000 jobs a month at the moment. A year ago, it was at 240,000. So it's actually some fairly consistent, steady improvements in the labour market.
Which all suggests that the economy can handle a rate rise.
Right, that's right. And so that's the thinking of, or at least it appears to be the thinking of the majority of the Federal Reserve. So they want to get ahead of the inflation that they believe is coming, that most of their models seem to indicate is coming, and they believe that a rate hike is justified. I think the sort of the risk to that view, and we saw that this week with the ECB, is that there is a strong argument to say that the Fed should hold off on rate hikes. And so you hear people like Lael Brainard, very influential governor of the Federal Reserve, making a very strong argument.
But to not make that move would really upset the apple cart with markets, wouldn't it?
Right, absolutely, and not just not making a hike, but perhaps even a smaller than expected hike. So, 15 basis points or even a slight delay, as we've seen with the euro, could absolutely hammer the dollar.
Now, OPEC deciding to not cut production, that means the oil price is likely to stay low for longer. You think not a surprise?
Yeah, absolutely. So, I mean, if you look at what OPEC is trying to do, they're trying to discourage investment in North American shale. So if they cut production now, crude bounced back up to $60 a barrel, we would see, I think, production in North America recover as it did in May, June, when we had the last crude oil recovery. So really, if they don't genuinely shake out investment in the North American shale market...
They need to hold their nerve for longer.
Yeah, that's right. Even if it hurts.
Okay, Ranko Berich, thanks very much for your analysis there.